it's Omar. It is Saturday, February 3rd, 7:24 a.m. in the morning, and I wanted to make a video building my watch list for Monday and review my trade on OTEX. I mean, I didn't post a video, but I did post my watch list. This was my watch list for yesterday, and again, I gave you some big money plays. I mean, go watch all my videos for January. So if you go to YouTube and you type my name, I have a Twitter and I also have a YouTube. So if you go, here's my Twitter, and I gave you look at this. I gave you this video right before I posted this right before the market opened. I said, since everything is tanking, I'm looking to short OTEX, huge gap to fill below, but must break key support level or no trade. And sure enough, the thing freaking tanked, and I did very well. I made about $2,400 on this trade. That's my Twitter, so make sure you follow me on Twitter. And then I have my YouTube page. So I also have a YouTube page, and if you go to my YouTube page and you go to videos, you'll see, all right, and playlist organizes it, so you can see that I made 3 videos in January and I made 1 for February. Go watch those videos and go see what the stocks did after I posted them. Pretty remarkable accuracy with great entries and exits. And I gave you that one OKER for yesterday, a short. But I also had, let's talk about a couple of stocks now. AKER actually ripped, and that was the #1 stock on my watch list. And if you watch my videos, I show you where I put my support and resistance levels. These are Fibonacci. I also added it. If you go to my Twitter page, on the top, I pinned the link, so you can copy this script, and it'll give you everything that you see here. All right, it'll give you the simple moving averages, the EMAs, the Fibonacci with the retracement lines, the 38, the 50, and the 61, all automated for you. Okay, now I did have a watch list, and of course AKER was on my watch list. And let's talk about AKER. I didn't trade it at the open, and I could have made a fortune, but to me the simplest trade was OTEX. That was to me the easiest money trade. I mean, it was just such a give me. But let's talk about AKER, which was, and I had this on my watch list when nobody was looking at it, and you guys could have banked like a week earlier, so I had it on my watch list. Now, the key entry on this stock, right, is we look over the last 2 days. Let me do something to make this easier. Let's do this. Let's go just to show you guys. Where is it? Where is it? What I want to do? Yeah, let's hit the touch. And I'm just gonna make this 1, and we'll do 2 days, 1 minute, and we'll maximize this. All right, so let's see. So very simply, what I always say is, right, this is where my alerts were below, just in case it went below, but it never got back down that low. So this was the higher day, Thursday, right? So my alert would have been here, right at the high, which was 39. It was 39, 30, 36, or 39.39. So let's do that, 39.39. So what do I always say? That I like to buy breakouts that hold support, meaning, right, the market opens, this was the high, right, up to that point, okay, and what I like to see is, let's zoom in, market opens, right, so this is market opens at 9:30, stock starts gapping up, right, so in this candle it breaks below it, but you got to see the body, the lower part above it, okay, and what you want to see the stock do is, you want to see the stock break above it. So me personally, I'm not buying it in if it breaks it. I mean, you can, but I need to see a retracement to see that this level holds as support, because currently it's resistance. Now once this candle breaks through here, now it broke through resistance. It really broke through, and you see it's starting to gap up. Now you see that it's forming this flag pattern. It's kind of like it's pulling back. Right here is the new support level, because it pulled back and you get that next push. So in theory, you could have taken the trade. The safe bet would have been to take the trade here, risking off the previous day's high, which was that 39 level. What I like to see is a stock gap up, retrace. You see how it kind of gets back to 44. So you see, and this is, and if you watch my momentum trading for beginners video, I talk about this, where stocks have these flag patterns. So let me show you guys what I mean. So you see how it pulls up, gaps up, pulls back. This is a flag. Usually when you get a flag, a bull flag, you're gonna get another push. Gaps up, pulls back. All right. So that's another flag, right? You see how it's gapping up, it's pulling back, it's forming that little flag. You get another push. Usually you get 1, 2, a last push, and then you get a wash, and then maybe you get another run. But here was the last flag, so you got that last flag here. And then, so you got 1 flag, 2 flag, 3 flag. You know, you got that little last push, and then you get the wash. I even noted it on Twitter. If we go back to my Twitter, I said, let me go. I even know. Look, AKA ER, last push, then a wash. Because when I saw the chart, I saw that it was, you know, it was flagging here, and I knew I was gonna get one last push before it washed, and sure enough, it did wash. It went from 44 all the way down. Look, and it touched the previous day's high. That is telling you now that you have a clear support level. You see how the next candle's green and it's starting to gap up? That is telling you that now you have a clear support level, and that is where all the smart traders actually buy the stock. They buy the stock here because they see now that the stock is higher than the previous day's high, and now it's a new support level. All right, it's holding support, and that's where you buy. And that's why you got this big run, because people saw that and they said, oh shit, okay, the stock is not going to dip below yesterday's high, it's holding above it, so now I'm going to enter. And it's a good risk reward, because you get in at 40 cents, risking literally a penny, and then just ride it up, you know, just ride it up. And you know, this thing went crazy. It went, and it broke past the Fibonacci. So this is the 38, a retracement. This is the 50, this is the 61. You could even like trade off these retracement levels if you wanted to too. That's for another topic. I got videos that talk about this as well. And you know, this thing just, and basically the reason why you're getting this trend like this, look at these flags. Look at these flags. You see, these are all flag patterns. When you see flag patterns like this, you know you're gonna get another move. Flag. See, looks like a little flag. See, every time you get a flag like this, you're gonna get a push up. Every time you see a flag, here we go, another flag. See, looks like flags. You get, look at this. This is like super clear flags, and this is the 1 minute time frame, guys. This is the 1 minute time frame that I'm looking at here. You see, all these are flags that keep giving you pushes, and then it gets to high day, and then you get the bear flag. You see, this is a bear flag here. Bear flag, bear flag. That's what you're looking at there. Also, it's above the 200-day and 50-day moving average. The purple is the 200-day moving average. The blue is the 50 and VWAP. Once you see that, I mean, you know you're gonna get a push. Now, just so you know, let me clear all this. Just so you know, the reason why I keep squeezing like this is because short sellers think the stock of the price of the stock is probably gonna go down. Like, oh, it's not gonna go any higher. They take a short position, and then they have to cover, causing the artificial spike. Because if I'm a short seller, I go, okay, I'm gonna risk off higher day. So at this time, this is 1047. This is high day, and they go, okay, I'm gonna take a short. So they take a short, right? And what happens is the stock starts gapping down, and it finds a support, and then it starts bouncing up, and then short sellers are like, shit, this shit is gonna keep going up, so they cover. And probably after, once it broke 50, they probably took another short here, and they think, all right, that's done. It's, you know, because 50 cents, whole numbers are psychological resistance barriers, and it gets above it, and then that's what caused the crazy spike, because they're all covering now, because they're all freaking out, and that's what caused the artificial spike, you know. And if you notice, it got to the higher day here, 63%. It retraces what, 50%? This is the 50%. Actually, 61% retracement. This is 38. This is 50. This is 61. And then look, right off that 61% retracement, you could have bought the bounce. So, you know, that to me, that was like, you know, an easy trade. I didn't trade it because, let's go over the stock that I want to talk about, which was which was OTEX. So OTEX, the reason why I was so sold on OTEX is, let me clear the chart for you guys. The reason why I was so sold on this is because this is the yearly, this is the daily, and look at this candle, right? It gapped up from, so look at this gap to fill it has below. On this day, it hit a high of, it opened at 34.09, it hit a high of 34.47, and it closed at 33.95. The next day, it opened at 37.50. All right, so you know, and it went a high of 40, so it went up 8 points. All right, and because it has this gap to fill the below, you know, it was so extended. And I look at the yearly chart, I say, okay, when's the last time this stock filled the gap, and what did it do the next day? So if you notice on here, this was December 28th. December 27th, it closed at 33.01. The next day, it opened at 34.45. So you know, if it had this gap fill, it gapped up a little bit, but you notice that the next day after that, the 29th, but it eventually gave back its gains. So you know, each time it had a gap, it eventually gave back its gains. At least that one time. And then it had another gap fill here. This was on August 3rd, August 4th, it gapped up. There was a gap here in between here, and you notice it gave it all back. So what does that tell me? It tells me that the history says that, you know, every time it has a crazy gap, it eventually gives it back, right? So so with that said, the market, the Dow was down pre-market, right? It was like bleeding. Everything was gapping down. So it was like the easiest, safest play to me. So I had a mark set at, you know, Thursday's high, which was 40.31. And then I had another mark set at the support level. So 40.31 was the high, and then the support. So this is let me look at it. Let me just zoom in here. So support was here, which was at that 38. You see, notice the 40.31. Then it pulled back, and then it kind of found support here. So I had an alert at that 38.44 level. So let me see, what was it? Yeah, 38.44. This says 38.32, but you guys get the point. So what I needed to see it was break that support in order for me to short. Now what happened was the market opened, and it just pre-market, it started, like, you really can't see. I think it opened, it just opened lower. So right in this candle, you know, it wasn't, you see, there's no volume, so I still didn't break the trade. But the next candle, there was volume. So in that next candle, once it broke below 38, I got in 2,000 shares. I think it was 2,500 shares actually, and I just wrote it down. I just wrote it down, and I was using E-Trade, guys, just so you know. And look, it just, you know, it's below the 200, it's below the 50, and this thing just completely tanked. I mean, look at this, from 38, 37, all the way to 36. You know, and I just watched it literally collapse down to 36. Now, because the Fibonacci, you know, the numbers change. Oh no, I'm sorry, I'm talking about something else. Now I saw it dip below 36.48, and I saw it spike up, and I was going to cover. I didn't cover because I thought it was going to continue to just tank. I thought it was going to really go back all the way down to this 34 level, to be quite honest with you. And you know, I was like seeing my wins evaporate. But I was still up. I was like, I'm gonna be patient, and you know, I saw it dip below, and then it came back down all the way to 36.48, and look at that, double bottomed. So it found that clear support level, and that's when I started to cover. I covered I think it was like, I'm trying to remember. I was trying to cover. I couldn't cover it. Like, it would only cover in spurts because the volume was so low. And I think my average was, when I completely got out, I think it was like right, I'm trying to remember. It was like 36, like I think it was like 36.80. I think it was when I finally covered or everything. It was like 36.80. I think is where I got out. So nice, very nice trade. And then I took a long on it. I wasn't gonna just 500 shares though, very small size. I saw that it was forming this trend line, so oops. Let me put a trend line here. So I noticed that it was, kind of riding this trend, and then once it broke above the 200-day moving average and it broke below 37 bucks, I took a trade on it. I took a trade on it. I saw it gap up, I saw it pull back, and then I saw it starting to gap up. So right in here, I took a trade, 34.05, risking 37. And sure enough, it got up to 32.23. I saw it kind of pulling back, but it was still in that trend, and it got back up to 37.29. So I thought it was good. I thought that maybe that it was gonna possibly fill the gap above, even though the Dow was down. I thought maybe that might be a possibility. So I was in looking to see a retracement up back to that 37.94. But I saw that the time and sales, the volume pressure started coming in, started fading, and you can see the shitty size. I mean, I would never really recommend anybody take this trade. I just did it because it was just there, and I thought it was an opportunity. But right when it broke the trend, right in here, I got out. I didn't think. I was like, oh shit, it's gonna just tank. And I could have took another short, but I was done. I was actually like working, and it's just hard to focus and do both. But I got executed at 34.5. I got out at 37.16. So nothing. I made like shitty money. I made like I don't know, like $90 or something like that. It wasn't much, but it was good trade, And the reason why I don't trade more is because it's just hard. I work, and it's not the easiest thing to do. But I was working from home, so that's why I was able to make the trade. But I needed to focus. I have a big project due, so I couldn't really focus the way I wanted to. But all these stocks on my watch list, if you noticed them, I had alerts set. So if I go to my market watch, let's go to the maybe I think it's because it's Saturday. Shit. Man. I think it's because it's Saturday. It doesn't keep a copy of all your triggered ones. It's just showing the active ones. But in theory, if I go back to my stocks, just so you know, like each one of these stocks, I had alerts for the high, and then I had alerts for support and resistance. So right here, this was like a clear support level. So I had an alert set to short the break below the key support levels. So here's a key support level on the ARRI 1528. So I had it. So like if it holds, buy it, but if it breaks below, it's shorted, and great opportunity to short. Look at this. ARRI retraces exactly 61%, and then you got the nice little bounce. Not much. It was a 1483 to 1503, but a nice safe bounce. And I had them pretty much for all my stocks, just like that. I mean, all of them were shorts. All of them you could have shorted because they were all up the day before, and I had alerts set for all of them. Pre-market already broke below this key support level because this was Thursday, and the key support level here was that 1385. So pre-market, it already started breaking below the 1385. This thing opened down at 1374, and it just completely washed. Everything washed. You could have shorted any one of these stocks. Twitter, I had another one set. I had my high and low set. I had the high set at that 2740 level, but I did have a short at that break below the 21. This is the 5-minute time frame. At that break below of 2681, and sure enough, market opened, and 2681's here, and look at this. It touched the 200 simple moving average, got rejected, and then that's a key area to short. And then the 2181 was here where I had my alert, and it just broke below the alert right here, and then you could have just took it short, and you could have just rolled this down. It was just nice, easy short. So I spent a lot of time talking about, the two trades that the trade that I took, which was OTEX, the trade that I didn't take, and why I didn't take AKER, even though it was like a super cheap stock to trade, why I took OTEX. So I hope in that regard that made sense. And I'm showing key support resistance levels where you can take trades. And now we'll build our watch list for Monday. And I know this video is gonna be a little longer than usual. I'll try to just add like 5 or 6 stocks, and then I'll let you kind of you know, figure it out for yourself and build your own watch list. I'll build my final watch list and post it to Twitter after the fact. So again, I look for stocks. I change the criteria. This is between 10 cents and $40. I mean, you can make this more. You can make it 50, 80, 100, whatever you want. A minimum of 300,000 shares traded, up 3%. You hit scan. We got 81 stocks. So if I go to charts, that's this watch list here. I usually filter by volume. I start by the stocks with the most volume that are traded, and then I switch over to the highest percentage to see if I can find some gems. So obviously AKER is going to be on the watch list for Monday again. So I mean, that is in play. So we're going to go to create watch list for tomorrow, 25/18. We're going to hit save, and we're going to put AKER on that watch list. And I really highly recommend opening a Thinkorswim account. It costs nothing and it's fantastic. It alerts you to key support and resistance levels, which are phenomenal. Now I don't think it's gonna get back to 63 cents, but let me eliminate all these, cancel all these alerts. So right here I'm looking at the 1 minute time frame. This is the 5 minute time frame. This is the 15 minute time frame, and this is the daily. Right. It's important to be able to see multiple time frames. Now, obviously, we should always put an alert at the high. All right, so you know this stock has been running at 3 green days. You know, with volume increasing each day. It was 14 million, 57 million on Thursday, and then yesterday 117 million shares. That is insane. So what we're gonna do is we're gonna put an alert because maybe it attempts to get back. So I go down to create alert. We're gonna put 63. So it's either gonna happen. Two things are gonna happen. If it gets back to this, either buy the breakout if holds 63, or short the rejection. It's that simple. So that is a key level for me, right? And that's a key level that I'm gonna look at. You know what? And as a matter of fact, I'm gonna yeah. Let me put a line here too. Just because it's weird when the alert triggers, unfortunately, it like disappears. It'll remember it. It'll keep reminding you when it touches that point, but it disappears, which I don't like. So at least I have a trend line there. Now it gapped down. So where we're at right now. So where's the key level right now? So right now it's holding. It's really holding. It's pretty incredible. This is the 50% retracement. It's kind of like in that level. So to me, a key level, a potential key level to trade for me would be at that break. Even though you got a break, you got 55 cents. So I would be looking at it at 53 cents, and definitely if it breaks and holds 55, I think I would, you know, maybe take another crack at this. So you have two key resistance levels. You have now, this is a resistance level, which is let's look at that, which is a 53.3. So you know, we'll put an alert there just so that, you know, it'll keep us alerted to anything that could possibly go off. So we're gonna create alert. We're gonna put 53.3. We're gonna see short rejection or potential buy if holds 53, resistance at 55. So just to keep in mind, right? So basically what I'm looking to see is, let me zoom out, right? I want to see it hold this level. All right, what happens is it could touch it and then reject it and then tank, and then you can short it, risking that level. Or if it breaks above it, you want to make sure that you see you have another resistance point right here at 55. Right here at what's the high? It's 54. The high is 54.38. So I would put another alert here. All right. Short rejection or buy if breaks above and holds as support, meaning 54.38, meaning I'm sorry, oops, 54.5438. And what I mean by that, guys, is honest. They're so close that you can't even tell them apart. The system can't even tell them apart. But what I mean by that is, if it breaks, you want to see a stock break above the resistance point. So I want to see it break above this, kind of maybe gets here to like 58, pulls back, holds that 54 level, and then take off. That's when I'm buying. All right, and my target is 63 cents. You know, because that's the next resistance area. Now, if it breaks above 63 cents and pulls back and holds 63, then you know you can just keep taking it long. Now, do I think that's gonna happen Monday? I have no clue. Nobody knows. But I'm giving you key levels to potentially trade. Now, I'll put one more key level on this chart, which will be this 42 level, because I think if it breaks down, you got another key. You got two other key levels. You got one at 39. You got 38. You got another one at 38, and you got another one here at 42. So what could happen is the stock could like have a massive panic selling sell off at the open, and then like shorts find a key support level, and then they cover their shares, and then you get this artificial spike that you can kind of ride the wave. So these are two other levels that I would potentially be looking at, which is that this low is at 42.06, so I would put another alert at 42.06. Now this is much more detailed than I normally do in a video, but because it's the weekend, you have more time, you know, I kind of want you to understand support and resistance to see how it works. I put potential short or dip buy if holds as support. Okay, so that's one area, right? And then the other area would be that last, to me, key level, which would be here, that 38 or 38.93, which was that breakout of Friday. So I would just put, I already have a trend line there. I'm just gonna put the alert. Actually, let's see what it is. It says the low is 39.12. So I'm gonna create an alert to say 39.12. I'm not, at this point, I wouldn't even short it after that. I would just put potential dip buy if holds as support. Alright, so now we got our key support and resistance levels for potential buys or shorts. Okay, alright, because this is going to be traded Monday. Trust me, I mean, it had so much volume. People are going to be paying attention to it Monday. Chat rooms are going to be trying to pump it. Short sellers are going to be trying to short it. So they, you know, so it's going to be in play. I think after Monday, it may start to fade, but the volume is still there, so it has to stay on the watch list. So we have our key support and resistance areas. That's all it is, guys. That's all we're doing. Next up, POTN. This is one of those pop stocks that gave back. I had this massive sell-off, and I had been telling people to trade this since like 50 cents, and people were banking that for watch my videos. Let's do it now. This thing had a run from literally 13 cents to 95 cents, which is crazy. It retraced. Look on the yearly. Look what happened. It retraced. The 36 cents is the 61% retracement on the daily. It got to a low of 32 cents, which is crazy, and now I had the bounce. So, you know, fibs are pretty amazing, man, when you know how to use them. And if we look at the chart, you know, it got to 32, and then it's just kind of been on this run up again, you know. And look at this. This is the 38. This is, let me just, so you can see. All right, so this is the high, this is the low. The way Fibonacci's work is, just so I can remind you all. So you look over a 2-day time frame, and you take either the lowest point to the highest point, or the highest point to the lowest point, wherever the trend is, and that includes pre-market. So 64 was the high point, the low is 32, and you got to make sure that the numbers are exact, otherwise your Fibonacci doesn't work. So here's the trend, right? So the high point to the low point, and now you have the retracement numbers here, and you see it retraced 23% here at that 39 level, 38% to 44 level, and now it's consolidating at this 48 level. What does that tell me? It tells me that more than likely Monday this thing is gonna move. So what I would do is, let me remove the Fibonacci. Actually, zoom out real quick. So what I would do Monday, me personally, is, let me just remove this so we can, I would see, and I don't know why this thing's acting crazy. So I would buy the high of day for that, which would have been right here. If it holds 51.99 or 52. So I'm gonna create an alert for Monday, and this could be a potential big win for you guys come Monday. So I would say, all right, buy breakout if holds above 52. All right, that's the only thing. That's the only thing I'm looking at right now in terms of this stock. Now, theoretically, if it doesn't hold 40, so the support level is 48, you could short it, risking that 52. So I'll put another alert just so you can see, because this seems to be the clear support level now, which is at 48, which is interesting. It's aligned with the Fibonacci, right, which is pretty cool. So I would create another one. So I would say short rejection of 48. Okay, or dip buy if holds that support. Meaning, it sounds stupid, but if the market opened and this thing pulled back to 48 and it just holds there, and you know gaps up, it pulls back and holds at 48, then that's a potential. That's a buy. All right. Now what I would be doing is, all right, the next key level is at 64 cents. So what I would do is I would put another alert here at 64 to say, hey, if at potential, so I would say potential, it's a potential short because it could reject it at 64. Potential short of rejection at 64, or buy breakout if holds. Okay, so now we have our key levels here. All right, this is the 1 minute time frame. For whatever reason, it's, yeah, I gotta zoom out in order for it to see it. All right, so these are our key levels. All right, now what you want to do too is you want to go back further in the history. So I'll put up like a 5-day 15-minute chart here, so you can see what are the next key levels above it. So like the next key level above it would be 72. So you would be looking at 72 for a potential, you know, sell. That would be your target, because maybe it gets rejected at 72 and it can't go up anymore. Then after that, it's 79. So you see, you just got to keep going up. It has resistance going up all the way. So you got to be mindful of all those areas as the stock goes up, all right? So we're going to put that on our watch list. And I think these two stocks would be in play. POTN, I think it's going to go higher Monday. You know, it's a wheat stock. These wheat stocks, you know, they ebb and flow. So we'll see. So we got two. So far, so good. And they're cheap. So this is great for people who don't have big accounts. You can trade these shitty companies. Next up is Sprint. Let me go back, put back my 2-day 1-minute chart. Let's see, do I want to trade Sprint? I don't really care for Sprint. I mean, you know, it's not very volatile. It's choppy. I mean, you could trade it. I mean, if you wanted to, just for a potential swing, because the stock on the yearly's been beaten down, just for fun, put an alert. And I would then say, if breaks 556 and holds as support, buy breakout. Or buy breakout if holds above 556. I don't know what's wrong with me, my words. But so that is probably the only thing I would look at, because the stock has been so beaten down that, you know, maybe potentially it starts swinging back up, and you could take it for a swing, risking that 556 if it breaks above it. I'm not gonna put it on the watch list, but I'm gonna leave an alert there, and that's what you can do to look at yourself. Next up, Mattel. Mattel is one of these stocks I have traded. I actually I got really lucky. I made like, I think it was like $5,000 on this stock. Going long, I was in it, and then like after hours it like rocketed because of some news, and I was in it just by luck, and I made like a lot of money trading it. Let me clear this. So just so you know, the stock probably had some news and it gapped up to like 16, probably some earnings or something. If we look at the chart, you know, it had been beaten down, had this big green day. Look at the last time it had a big green day. It gave it all back. right? So look at this, had this gap to fill, kind of held, consolidated, gave it all back. So Mattel is not a company that you can expect to run crazy. I don't think it will. I mean, over the last year, the high was $26. I mean, it's just been getting crushed ever since. It got to 12, got up to about this $19 level, and then it came all the way back down to 14 bucks. So there's two ways we're gonna play this, right? And I'm gonna put this on the watch list because there's a potential opportunity here. So if it holds above 16.95, right? If it holds above 16.95, so oops, we'll put a trend line here, and I'm gonna put an alert here. Create alert. So buy, breakout, if holds 16.95. Now what's going to probably happen with a stock like this is, if you know, the market may open it, they break above it, go above 17, pull back below it, and then find a support level somewhere in that 16.95. Once you see that clear support, that is when you buy. Okay, you got to be careful. I mean, look, it did go crazy and spiked, ripped. Now you're gonna say, well, more, let's say this was high a day right here. I'm missing this, 1447. Just use an arbitrary number. If it broke above it and doesn't pull back, do you mean don't buy? Yeah, that's exactly what I'm telling you, because you don't want to get into a habit of buying those stocks, because a lot of times they get rejected and you're in, and then you take huge losses. So I'm trying to teach you how to trade safe. You know, what you need to see is a pullback. And if you see a pullback and it's close to the support level, that is where you buy, because you see the value coming in and then it keeps going. You just don't want to chase a stock. That's a recipe for a disaster. Now, the other key level here that I would be looking at is this. You see, it seems to have found this clear support level at that 16.47 mark. Let me just zoom in here for you guys. Actually, no, it's 16 low 1650. So let me bring this up. Let me edit this, 1650. So we're gonna put an alert to say, if it breaks below 1650 and like it rejects 1650, we're gonna short it. And this way you could take, if the Dow is really bad on Monday, again, I think this is gonna be a great short, potential short. So potential short at rejection of 350. I mean rejection of 1650. Okay, and you know, you do have some support here below it, right here at 1602. So I would be looking to see what it's gonna do at $16. So I would, just in case, just because this is the only other support level, 16 bucks, I'd put another alert here. Oops, there we are. And I would put one more alert here to say potential short at break below 16, or dip buy if holds at support. Okay, so these are the three key areas I'm looking at, all right, for my entries. Okay, now this may tank at the market open, and then just, you know, people take their profit, and then it finds a support level at 16, and then it just rockets. So that's a potential entry, guys, and that's all I'm doing. You see what I'm doing, guys? I'm just marking support and resistance levels. All right, I'm not talking about, but I'm also using Fibonacci as well. Like Fibonacci, you know, according to the Fibonacci, according to the Fibs, you know, the 38% retracement is at 1599. The 50 is 1579. The 61 is 1507. So if it retraces back to one of these key levels and holds as support, I might take a trade based off one of those Fib levels as well. Okay, so you know, and Fib is pretty accurate. All right, so you know, I have those there already there. That's without saying. Okay, so far we have 3. I'm gonna put 3 more, and then I'm gonna stop the video. I'll keep building my watch list, but I just want to show you guys how this is done. IBIO. Now this is another shitty dog shit company that has a gap to fill above at 24. I actually filled the gap, which is interesting. Now look what happens. It's had 2 green days. It's getting some volume, 3 million Thursday, 13 million. Now I don't know what the fundamentals are, what's going on. It's a biotech company. I don't think this is gonna do anything. It's very choppy, but just in case. Now we look at the yearly. Let's see, has this stock ever had any real big moves? It's gotten to a high of 40. of 40. This here opened at 35, hit a high of 47. So it's had some range in the past. On this day, it hit a high. It opened up at 50. It hit a high of 54, low of 37. It's not. So it's a shitty company. I mean, look back last year. It had a couple of days where it moved. It opened here at 42 cents. It hit a high of 51. The next day, it opened up 47, hit a high 54, and then man, it's a shitty company. I mean, if you want, you could put an alert at 26, and if it holds 26, you could potentially trade it. I'm not gonna look at it. BSPM, 13 million shares traded. It's very choppy. I don't like trading stocks like this because it's just, look at this. Like, you don't get a clear direction. It's just all over the place. It's hard. This is very hard to trade. You could have, I would only look to short a stock like this because it's so freaking choppy. Am I gonna look at it Monday? Now it has had 2 nice green days. I don't know. The only thing I would look at is if it breaks above 471. I'm just gonna put an alert here. I'm not gonna put it on the watch list. Buy, breakout, if holds 471. I don't know. I don't like it. It's not really something. I'll keep it on the watch list just in case. I don't know if it's gonna break 471 or short the rejection. I'm sorry, and we should. I'm gonna put or short the rejection because maybe it goes there and it goes back up and it closes. I'll put it there. Why not? Because it could be a potential short. If it touches that key level. Otherwise, I'm not looking to trade this at all. It has to get close to this. It has to break above it and hold it, or go get close to it and reject it to short. That's the only thing we look at. Next up, VIAV. VIAV is a stock that, look at this. Thursday, it closed at 867. The next day, it opened up at 9, hit a high of 1050, hit a low of 965, closed at 10. So I don't know what the news is on this. I mean, it has some news here. I don't know what it was. Maybe it had some earnings. I'm not even sure. But this could potentially definitely be a short. And it's easy to borrow with Thinkorswim, which means that it's gonna be easy to borrow everywhere. All right. So we're gonna do this. This is gonna be huge for Monday. Absolutely on watch. All right, so we're gonna put 2 alerts. Well, I'm gonna put my trend line here, and then I'm gonna put my alert. So we're gonna do buy break if holds 1050, or short the rejection. So maybe it gets close to it, and it can't it can't hold it. So you short it, risking off that. It has to hit that key level. Now it has this clear support. Here at 990. What's the low here? It got to a low of 995. I see it. Really, it's like 10. But what I would do, me personally, I want to see it break below 995. So I would put a trend line here at 995, and I want to see this could be a monster short if it breaks below 995. So it's either a short breakdown of 995 or potential dip buy if holds, meaning right now the stock is at 10, so theoretically the market could open and it can get that to that 995 level, hold, and then take off and run. But if it breaks below 995, I mean, you do have some support here at the high of 970, like 980. You do have some support here. But if it, it's very light, and if it breaks below that, I mean, I could see this filling the gap back below all the way to $8. And I think it will at some point. If we look at the yearly, let's see did it ever have a gap? Looking at the yearly chart, at least for 1 year, you can go further back and look further. But on the last year, it didn't have any of these gap fill plays. Right here a little bit, and then fill that gap there. But nothing really to call attention, but I think it's gonna fill the gap below. So this is gonna be a great opportunity. So far we have 1, 2, 3, 4, 5. I'm gonna put one more, and then I'm gonna stop the video, and then I'll I'll add a couple of more. But these plays I think are good enough for Monday, to be honest with you. You don't need a monster watch list. You should be watching no more than like 5-6 stocks, to be quite honest with you, and really focusing on 1 or 2 setups. I mean, that's what's gonna make you. Now, this is a higher price stock. This is a high price stock, and it's up. It's been just running crazy since 29. It's up at 39. Now this is something that I would trade. I'm gonna skip it just because I'm gonna give you guys something a little simpler. So here we go. Here's something that we could potentially get behind. VKTX has just been running. It's kind of like these when stocks trade like this. It's like very choppy. You gotta be careful, but it does have range. I mean, this thing went from 536 to 637. So. And let's see, does it have any, and oh, it's hard to borrow with Thinkorswim. It may not be with E-Trade though, I'm not sure. So what I would be doing, right, because this stock just continues to run and run and run, is I would then put an alert. Oops, let's do this before we do that. Put an alert here at 637. I'm also gonna put put my alert, so if it breaks and holds, buy breakout if holds 637, or short rejection. Buy breakout if holds 637, right? Or short rejection. So just to recap, and just to make sure you understand what I'm saying when I say that, is stock here is currently now, right? It's 609. If it breaks above 637, so let's say it goes above it, I don't buy it when it breaks above it. I want to see it retrace and hold that 637 level, or a little bit above it and find a support level so I can risk off that, all right, and then take off. That's when I buy the breakout, all right. That's what I mean. Or let's say it goes up, it gets around here and it's rejected and starts selling, then you short it, okay, if you could find the shares to short, all right. Now, so that's one key area. The other key area here seems to be this 590 area. Even though there is an area here 603, there is some resistance here 603, but I think a big key area is this area right here, because you can see it has a lot of support here in this area, which is that what is this? It got to a low of 593. So I think 593 is a good key area to say. I'll create an alert. So we'll put 593 and we'll say short breakdown of 593, or dip buy, meaning it may just wash, right? Market opens, stock washes to that area, finds the support, and then it's off and running to the races. All right, so these are the key stocks that I'm going to put on for Monday for now. I mean, I'm doing this in real time, so obviously I'm going to look through a lot more charts, and this may be modified. I'll keep these on for regardless of what I find. I'm probably just add maybe like 5 more if I find any. But these are the stocks that I'll be looking at Monday. Mattel really, even though I know it's a high price stock, this is the one that really has piques my interest for Monday. Mattel and VIAV, only because VIAV has that gap to fill below, and if the market is crap Monday, man, this thing you can get like a good 2 points Monday on this. So shorting it. So we'll see. All right, guys. So hope you found this helpful. That's all I do, guys. Support and resistance. That's the key to trading. Finding your key levels. Only trading when the quality setups present themselves. Otherwise, you don't trade. Okay. All right, guys. So have a great weekend. Bye.